Hey gang, no intro today. I'm running a little bit late. I just finished up with the guys over at Benzinga. Good to see you all. Happy Monday, gang. Happy Monday. Hope everyone had a wonderful weekend and is ready to tackle a brand new week. I was just talking about the guys about the volatility we saw last week. And a lot of that volatility had to do with what was going on with the Thursday action. And a lot of folks have asked me, Rog, what happened on Thursday? And this is really a big part of, let's move over to S&P here. A lot of emails came in, or even just in charts and coffee and so forth. What happened on Thursday? Thursday is a perfect example of what's been happening very slowly since 2020, meaning we've been seeing more algorithmic influence. We've been seeing more retail, for sure, retail trader participation. We've seen more influence from 0 days to expiration options. So when people say, well, Rod, we see that you've rebuilt, not even rebuilt, this is evolved the tools that you're using. Why did you do that? I mean, if it was working for 30 years, why fix it? Something doesn't have to be broken. I don't want anyone thinking the previous tools I've been using are broken. We should all just be driving around in what is it, Ford Model A's still, right? If that's all we needed. But things have to evolve, right? Things have to evolve. I should still be driving around the car that I had in, 1989. Things evolve, things get better. And part of the reason we're pushed to evolve is there are different influences. And I think Thursday was such a great example of how those three specific feed on, and this goes to the upside too, gang, feed on some panic. Notice how the very next day things normalized. And the reason I say it's the influence of that panic, especially the algorithmic reaction to this, is the algorithms don't care if there's a trend. A lot of them are just arbitrage algorithms, right? So all they're looking for is those infinitesimal little moves. They don't care if the market goes up or down. They're just looking for a lot of participation because that's going to allow them more transactions to take those tiny little pieces. Thursday had to have been a huge day for HFT and for those kinds of traders. But come Friday, things sort of normalized, and they probably just fed a lot of the upside movement, right? So when I look at this right now, here's what my tools are saying. First of all, don't abandon the uptrend. Take a look at the green candles. There's nothing to say Thursday's action broke the uptrend at all. Number two, today is going to be the first day so far where we're not getting that kerosene poured on the movement either down or up. Because look, Friday was a pretty dramatic day to the upside. Do we not think the same participation that fed the sell-off on Thursday fed the rally on Friday? So today we're going to see, hey, do we have now, and think of it this way, it's a 0-0 ball game. It's a tie ball game, however you want to look at it. And now, hey, do we have the ability to continue higher? This is what I'll say the indicators say. I'm going to look at price action on the S&P futures for now being capped around 53.20. I am not looking for new highs. I'm not looking for the kind of action we saw through February into April. And the reason being is twofold. One is, obviously, the Federal Reserve is not wrapping their arms around the message of a consistent, we're going to cut, we're just not there yet. It's a lot of Fed members saying a lot of disparate things. That's what creates all this nonsense, because a lot of the rally we're enjoying is the fact that we're expecting the Fed to cut rates. That macroeconomic reason is enough to keep traders buying even before the thing happens. Buy the rumor, sell the news, right? I don't think we have to sell the news, but definitely buy the rumor. So I'm going to expect a little bit more range-bound action through April. That's not to say the trend is broken. That's just to say we're taking a pause. And that's what this gray here tells us. And this is not the only place we're taking a pause. If we take a look at the NASDAQ, also taking a pause. By the way, look at how many times the NASDAQ has taken a pause through 2024. And yet, higher highs have been the end result. So please remember, just because an uptrend is taking a pause doesn't make it now bearish. It simply makes it neutral. And so this is where we take a look at these three indices, the S&P, the NAS, the Dow, and say, okay, a lot of volatility, yes. But overall, what we've been able to see is that support holds and ultimately the trend does resume. But we do not have a trend on these three big indices at the moment. And that's something that two things. As long as we expect continuation, we're going to be fine. And as long as we have a set of indicators that are going to, in real time, give us that feedback of a shift in momentum, a shift in the trend, give us that visual clarity, traffic light, in this case, greens and grays and reds, or greens and yellows and reds, right? Anytime I see yellow, that's just neutral. Anytime I see gray, that's just neutral. And I'll look at the trend that preceded, because that's likely the direction of the continuation. And in the meanwhile, we continue to see a lot of strength in some other places. We don't have to play the indices. Remember, crude oil, energy, financials, industrials, and of course, we're heading right into earnings season. I was telling the guys at Benzinga, I hate earnings season. I hate this time of year. It's just unnecessary volatility that's going to create, issues with trends that have been doing just fine. Thank you very much. Right throughout this year. So as always, gang, the best part of our show are your questions. BITO. I'm not in BITO right now. What I was mentioning on Benzinga is I don't trade the Bitcoin futures or even Bitcoin on the crypto exchanges. Lately, what we've been doing is taking a look at the ETF of Bitcoin futures. So this is two contracts of the BTC futures contract, and then it's represented as an ETF. So think of it as the S&P, where there's S&P futures, part of why the SPY or even the SPX would move. So that's the way I've been looking at this. But BITO is still very tradable. I would wait for about 28.38. You can see there's a Darvis level of support. I would not get in now, but we're pretty close to the level. If you wanted something today, I would wait for ideally 28. This seems to be what? 28. I'll give you the exact price. 28.41. And this is how let me show you how this setup's going to look with the new tool. So a lot of folks said, Rog, all right, the markets have been trending, but what happens if we go into chop, right? What happens if we go into chop? How would I use the top tier tools? I'll show you right now. Still going to focus on the daily price movement ranges. Volatility doesn't care if it's a trend or chop. Doesn't matter at all. We have chop, right? Now, once I have chop, that's where I go take a look at the secret squiggle. I've always been wanting to name an indicator the secret squiggle. What does it mean? It just means Raghee's always wanted to name something secret squiggle, but it's a fantastic and powerful way to understand overbought and oversold. Oversold is support, overbought is resistance. And notice we're coming into the green area here at the low. That's oversold. So the more I can sink in that with a layer of support, whether it be Darvis or whether it be DPMR based, that's how you get in to non-trending environments. Now notice, I'm still bullish. I'm not talking about shorts here, because the energy that preceded the chop was up. Respect that energy, because if you think about it, every time we've gone into chop, like we did back in here, right, and focused on either support at Darvis or the DPMR, it's worked just fine. So keep that in mind. Don't presume a broken trend is a downtrend. I would tell you 90+% of traders look at trends in a binary way. It's either up or it's down. And the problem is there's this pesky little neutral environment, this pause environment that happens within the context of trends. And if the assumption is reversal, that's going to cost you money. So we'll look for a continuation here. All right, next up. Thank you for the question, Panthers. David asked, can I please take a look at Win? Sure. No trend above the 200. This would be an overbought, oversold conversation. So that means that here, see the signal? This is part of the top tier, by the way. The gray zone tells me I look at the secret squiggle. There it is. That's it. That's the setup. That's how easy it is when it's automated. I have no skin in this game, David, but if someone were to say, what are you looking for? What was the setup? How cool would it be to be able to look at indicators that plot, right, on your chart, so you can go back and look at 5 or 10 years and say, oh, that's what the pattern should look like. That's what the pattern should look like. Now, after the move higher, nothing for me to do, my friend. Not until I get another setup like that. And here's what's difficult. If we're momentum trading, if someone's momentum trading, chances are it ended up on the radar here, which in my estimation is too late. However, if we retest that old resistance around 105, that could be a very aggressive, what was once resistance becomes support type level. So you can keep an eye on that. But the classic top tier oversold buy, gray environment, there's your cue, there's your setup. There's your chart, there's your Darvis, there's your setup. So, that doesn't happen constantly. Obviously, daily time frames, we only get 5 candles a week. So it's really important that we have a consistent list of names we're looking at with the possibility of continuation. So a really basic list is I would not focus on any stock that is not at least above the 200 exponential moving average right now. All right. Okay. Next up, when XLE goes up, does S&P usually go down? No, no. Java. So remember, S&P is mostly tech, financials, healthcare, but there is a component of energy in it because there's Exxon weighting in the S&P, right? Crude oil is why XLE would move. So no, there's no inverse correlation to energy and S&P. If anything, it should be more of a positive correlation. However, what I would say is don't worry about what the two of them do. They don't need to correlate. They don't need to talk to each other. They don't need to hold hands. Keep an eye on crude for XLE, keep an eye on Exxon for XLE, and then keep an eye on S&P to do what it will do based on what's mostly happening in, I would say, financials right now. All right. Next up is AMD for a turnaround. AMD for a turnaround. No. So this is where I'm going to say, of all the things that I could look at in semiconductors, I want to make sure, this is really important. I want to make sure when I'm looking at my top tier candles that anything I'm going to buy at worst is either a yellow candle in the mix or is a green candle. So when I have yellows and greens, right? When I have these yellows and greens, great. I can look for those, as you mentioned, turnarounds. Is AMD likely to turn around? I'm not going to guess at it. What I am going to say is, or ask, is when I start to look at the names within semiconductors, when I start to scan through the names in semiconductors, ultimately what I have is, I'm going to pull up on my other screen here. There we go. So what I'm going to look at is NVIDIA is still fine. I would consider NVIDIA. AMAT would be one to consider. LRCX. Qualcomm. Qualcomm would be another one to consider. And that would probably end the list for me. I don't want to see any red grab candles in the mix. That's really the main thing. So if I trust my indicators, if I trust what my top tier candles are telling me, then I look at this and I look at this from a perspective of there's a good chance, there's a high probability that I can get follow through in places that they're at least bullish to neutral. And that's what the candles do for me. Green eggs and ham, CMG. Oh yeah, CMG mean reversions may be tough. We have not been coming down to the 34 bar mean, but I would say turn on, if you've got the classic propulsion or if you're using the updated next gen top tier propulsion, turn on the 13 and 21s. When we have an accelerated trend, and we could definitely say CMG could be one, keep an eye on a mean reversion to the green, yellow, red zone, but turn on the propulsion and you'll see there's a couple times every now and then we'll pull back to that area between the 13 and 21 propulsion, which is what that is right there. So CMG, definitely a buy the dip. But where is that dip going to be, right? Where would we think about that dip? And by the way, what else would make me bullish this year? This week. Remember, this is the week of the pit bull low. Those of you that are fans of some of the Market Wizards books, and the very first book, which frankly is still the best, there was a trader. One of my favorite interviews was actually Marty Schwartz. They call him the pit bull. Marty Schwartz was the one that basically, I guess, I don't know if he was the one to come up with a pit bull low, but he's certainly the one that's credited with it. The week before expiration tends to be the week of pit bull low. And the window that I have found over the past few decades after I learned about it is usually between Wednesday and Friday. And that tends to be typically bullish. So that is what we've got. And the Pitbull book is a good one. Yeah, I like that one too. His book, Pitbull, it's not a trading how-to book. It's definitely more of a memoir, but really good. His interview was definitely one of my favorites within the original Market Wizards book. Okay, moving on. SMH. As a general rule, SMH is going to do whatever NVIDIA lets it. Do I mind SMH? Not at all. Take a look at the candles, gang. Two things. Number one, is it oversold? It's getting there. It's getting there. Are there support levels? Getting there. Is it neutral to bullish? Absolutely. It's trying to get bullish again. Look at how candle by candle, it doesn't matter if it's a 1 minute candle, if it's a weekly candle, we're getting candle by candle, real time assessment of what's happening from price and participation. So I can say I'm neutral, but I'm bullish. What was the trend that preceded? What was the trend in the interim? What is the trend we're getting now? Absolutely. I would look for the long side in SMH. And a lot of times it's going to be the best way to take advantage of NVIDIA with a better bang for your buck, because NVIDIA is pretty darn spendy. And SMH is going to do pretty much the same thing that NVIDIA does. NVIDIA, Taiwan Semi, AMD. AMD is not going to be a big help here, but as long as Taiwan Semi and NVIDIA can sort of undo the weakness from AMD, or if AMD can just level out, SMH is a great place to look. Yeah, Java, David, yeah, agreed. Those are great places to look. Absolutely. All right. Let's see. What else do we have here as far as questions? XLE questions, S&P, we got them. Remember, again, correlations come and go, right? We're never going to be told the correlation of something is going to tighten up. Remember that XLE is going to influence, right? It's one of the sectors within the S&P. So why not just play at the XLE? All right. Now, again, I don't need the correlation. All I need to know is, are the heavily weighted sectors within the S&P moving higher? Even XLK is getting a little bit of a boost from Microsoft. So that's going to help because that's the heaviest weighted sector within the S&P. Financials have been rallying into their earnings window. That's going to help a lot. Healthcare has not been helping. Healthcare has been a dumpster fire. And XLE has been great. So if I look at four sectors, four really important sectors, I lift the hood on the S&P, I'm going to see those cylinders, those sectors. XLE is one of them. So when 3 out of 4 of them are moving higher, we've got a good chance of the S&P continuing. But the correlation is not going to set anything up. So it's good to know what sectors are most influential. Don't worry about the correlation. Worry about the weighting. It's a very different thing, because the correlation will be of no surprise that it might be higher, a little bit higher from time to time when you consider what sectors are influential on which, by the way, on which index. And it's going to be influential on the Dow too. So keep an eye on the Dow. The Dow is mostly financials, tech, healthcare, industrials, energy. So it's going to benefit the Dow too. When you think about what's under the hood, you don't need the correlations as much. You just understand that, oh, these are the heavily weighted influences in that index. And they're definitely a positive correlation, so not a negative one. So thank you for the questions. Love it. All right, moving on to, let's see here. Bear with me. Any ideas on gold and USO? Yeah, I want to buy both. I want to buy both. Yeah, I want to buy both. X asked, do I ever have a black swan flash crash trade in place? Never, never, never. It actually is one of those things that seems to make sense, right? You know what we do? We focus on relative outperformers and we use stop losses. When we have those kinds of days, right? I don't believe in hedging. The only hedges in my life are in my lawn. It's one of those things that sounds good, but in practice, you'll see it really doesn't help. Have a stop loss, focus on relative outperformers, don't buy at highs. And then flash crashes just really are just another slight bump in the road in terms of, hey, we're going to have losing trades. Last week for me, I had a number of losing trades, not because of Thursday, but because of the fact that we're transitioning from trend to chop. Losses are going to happen. But as long as we keep our stop losses not at max debit, but at a percentage of premium paid, we can take paper cuts, and those weeks are going to happen. That was the first week of this year where I walk away going, wow, I didn't make any money last week. In fact, I gave a little bit back to the market. But if I look at the 13 weeks that we've been trading, and one of them out of the last 13 was negative, I'm okay with that. I'm not going to prepare for things that really are not negative needle movers in my account. Right? I hope that makes sense. Thank you for the questions. And just like that, gang, I got to wrap it up. Be good to each other. I'll see you tomorrow. Same time, same station. And I would be remiss if I didn't mention, I've got the webinar coming up on Wednesday. Let me mention this. It is not the same slide deck. We're going to go into some different topics. Every time I do a webinar or a class, which is coming up this coming Saturday, we always do 2 different webinars. So this is not a rehash of the previous one. Yes, you can check out the class at toptierproclass.com. Simpler Trading members, I think, get 10% off, but don't hold me to that. I don't know when that's going to end. And then we're going to dive into some more examples. We're going to talk about longer term examples. We're going to talk about more and different examples. So check it out. You can register for it. Even if you can't attend live, you can register at toptierprosystem.com. All right, gang, be good to each other.